It can be noted that the second quarter's earnings exceeded the street's expectations. A few days before the third quarter's financial report, it appears that Wall Street is still bullish on Tesla's stock. You definitely wouldn't want to miss this information because it means that margin will, of course, go up rather than down, and that's what I care about, says Cramer. Jim James Joseph Cramer, better known as Jim Cramer, is an American author and television personality. He is the anchor of Squawk on the Street and the host of Mad Money on CNBC. In 1987, Cramer founded and served as a senior partner of Cramer Berkowitz, a hedge fund. Using his stock market expertise, Jim Cramer founded his own hedge fund business. Cramer and Associates Cramer managed his fund between 1987 and 2000, with only 1 year of negative returns. He eventually announced his hedge fund's retirement in 2001, with an average annual return of 20 to 24% between 1987 and 2001, yielding an average of more than $10 million annually over the course of the 14-year period in 2005. Jim Cramer agreed to host Mad Money, the CNBC program for which he is best known. The purpose of the program is not to preach to viewers, but to educate them on how to think like seasoned investors. Over the course of the last 10 years, the show's popularity has steadily increased, making it one of the most watched investing programs on CNBC. Throughout my career, I have always found firms with vocal bulls and fierce bears to be fascinating, if only because they can be so amusing. According to Cramer, Jim Cramer's daughter first suggested investing in Tesla in 2019. While traveling from Oregon to Los Angeles, she made the decision to rent a Tesla. Before, she wasn't a car enthusiast, but Cramer claims that she was astounded by how much she enjoyed operating an electric car and how simple it was to recharge. She declared that it was the most enjoyable car ever. Although Cramer was dubious about the company and noted that the stock was pricey, his daughter was adamant about Tesla and claimed that Elon Musk, the company's CEO, was someone she trusted. She also claimed that Cramer had a prejudice against the company because he was too old to recognize the potential in electric vehicles. In addition to wanting to purchase Tesla stock, I'm going to save money to buy a Tesla. Cramer remembers her stating that, sure enough, she followed through and witnessed Tesla's stock rise 10 times. She had faith in the product, so she worked hard to purchase it, and as a result, Tesla gained a skeptic and a new convert in 2019. A few days ago, Mad Money host Jim Cramer and the Squawk on the Street team discussed shares of Tesla after the company reported disappointing third-quarter delivery figures. Cramer is an outspoken bull on the electric car maker stock, having gone from being an agnostic skeptic to a true believer in Tesla, which he classifies as a battleground stock. Just 1 day after the firm revealed third-quarter production and delivery figures that were below analysts' projections, Tesla shares dropped more than 8%. Tesla missed analysts' forecasts of 364,660 vehicles shipped based on estimates provided by FactSet owned, reporting 343,000 total deliveries and 365,000 vehicles produced during the quarter. The closest estimate of sales provided by Tesla is provided by Street Account Deliveries. The business said that it built 258,580 cars in the previous quarter of 2022, but this was a rise in output. According to Tesla's report, the company produced 345,988 of its more popular Model 3 and Y vehicles and 19,935 of its more expensive Model S and X vehicles during the third quarter. I believe that production has moved up in some different places, but I take my cue from JP Morgan, who doesn't like the stock and has been underweight, but they did raise the price target, which I find to be very interesting. Still, I believe that you have married Bush and are still bullish. I spoke with Mercedes this morning about the idea of going all electric and what an advantage it is to be Tesla and not have to worry about the internal combustion engine. Cramer was talking about margin inflation and companies trying to make up for a loss. He said the one that will do the best is Tesla because he thinks about things like that the other guys have to scramble and they're still making internal combustion engines. When asked when he thinks the day will come when there will be a truly competitive set winning out against Tesla, He pointed to the hundreds of people who are building vehicles and trucks that are about to disappear from the planet. Cramer stated that the company will be able to achieve a run rate of 500,000 by the end of the next year, but Ford has not been able to meet our expectations thus far, and all of the news that has been available is unfavorable and has to do with costs. Let's talk about warranties now. Cramer was positive about Tesla in a March interview. By 2022, he declared that he preferred Ford over Tesla equities, despite having been a Tesla bull in 2019. According to Cramer, Ford is poised to overtake Tesla and take the lead in the EV market. By 2026, Ford is expected to build over 2 million electric vehicles. For this reason, he prefers Ford stock to Tesla's. Nonetheless, analysts contend that Ford and Tesla are operating in very distinct markets, with Ford possibly attempting to overtake Tesla. When it comes to AI advancements, Ford is still a generation behind Tesla. This is evident in the judgments of analysts and specialists regarding Tesla's production and delivery figures. The report from the manufacturers of electric vehicles divided Wall Street analysts, and the stock price decline indicates that investors are concerned about the delivery numbers. While a JP Morgan analyst captain gave Tesla an underweight rating, stating that the business's expectations were met, a Goldman Sachs analyst kept Tesla's buy rating and stated the company will continue to benefit from the long-term shift to electric vehicles. The managing director of mobility tech and energy sustainability at Cohen & Note was written by Jeffrey Osborne in response to the Q3 delivery report. With facilities in Austin, Texas, Berlin, China, and the United States, Tesla has made a significant global production expansion with plenty of cash on hand. As the competition in the EV market heats up, the latter two are almost at full capacity. Given their emphasis on electrical efficiency and commitment to battery technology, Tesla is probably difficult to compete with in the near future. Cohen rates Tesla's stock as market perform and sets a price target of $244 per share. Following the deliveries data, Tony Sacconaghi, a senior research analyst at AB Bernstein, stated in a note that he believes it is improbable that Tesla would be able to meet its guidance range of 50% growth in deliveries for the fiscal year 2022. Although Tesla's vehicle production fell short of analysts' estimates at the end of Q3, the company still expects its margins to look good for the second half of the year. Bernstein has an underperformed rating on Tesla shares and a price target of $150 per share. Tesla attributed its shortfall in delivered units to increased cars in transit at the end of Q3 and challenges securing vehicle transportation capacity at a reasonable cost. Research analyst Emmanuel Rosner of Deutsche Bank expressed greater optimism about Tesla in general and stated in a note that the company sees potential for Tesla's humanoid robot concept, known as Optimus, despite the fact that it has only demonstrated a first-generation prototype at an AI Day recruiting event on Friday of last week. He also mentioned that Tesla is still working on its self-driving technology and supercomputer, known as Dojo for Artificial Intelligence. He wrote that there are still many issues with the system's performance, such as left turns and lane selection, but that the team is making good progress toward their objectives of deploying it to the entire North American Tesla fleet by the end of the year. The company is sticking to its $400 per share price target. Opinion's one of the most captivating tales in the automotive industry, Tesla is scheduled to release its third quarter earnings on October 19, 2022. The company's investor relations department made the announcement in a press release. Tesla stated that when we release our Q3 earnings, our net income and cash flow numbers will be disclosed together with the rest of our financial performance. Deliveries of Tesla vehicles are merely one indicator of the business's financial health and shouldn't be used to predict quarterly financial outcomes that are dependent on a number of variables, such as the mix of directly leased cars and the cost of sales foreign exchange movements. To see why other investors are confident about Tesla stock, subscribe to the stock.